Order! Order! You are an incorrigible delinquent at times. Behave yourself, man!
Now, for the first time in almost 10 years, for the first time, in fact, since the big crash, the US Federal Reserve has decided to raise interest rates, announcing the decision in the last few minutes to hike them by 1/4 percentage point. Share prices and the bond markets rose ahead of the widely predicted move, a move which could well have global repercussions. Well, our economics editor, Paul Mason, is here to explain more. Paul, this is really quite momentous, isn't it? Tell us why.
Well, it's been awaited longer in the economics business than this new Star Wars movie's been awaited in the movie business. And it is a big thing because it signals the turning of the world economy. You know, since Lehman Brothers crashed in 2008, the whole world economy has been on life support, emergency measures, the USA above all, and this is effectively the end of the emergency measures. But looking at the statement they've put out just in the last few minutes, announcing a 0.25% interest rate rise, you know, the salient words are the caution. They're saying, look, we're not going to raise rates as high as we normally would. We're not going to raise them as quickly as we normally would. And there's this $1 trillion quantitative easing, that money printed to keep the economy afloat. They're saying we'll taper that off, we'll slow that down. Nice and slowly, because what everybody's worried about, everybody with an economic history brain, is that in the 1930s when we had the Depression, they did just this. They said, okay, well, the crisis is over, let's get back to normal. And the economy tanked again. So everybody's worried in a world context about this not very surprising news, but nevertheless big news. In the country where spending money is a way of life, the price of money just went up. Americans will now pay a little more to borrow, but for the world, it's a big signal. The Federal Reserve's boss just announced the end of crisis measures that have lasted more than 6 years. On the eve of the financial crash, the US Central Bank was lending money at 5% interest. As panic set in, it slashed that effectively to zero to keep growth going. And that's where it stayed, until now.
This is actually good news. It's a vote of confidence not only in the US economy but also in the global economy. When they didn't raise rates in September, it was largely because of concerns about the rest of the world, including China. But now at least they're happy to go ahead and start to return rates towards more normal levels.
But this is no normal interest rate rise. The Fed is acting very carefully. It's still worried about the strength of the global recovery, including here.
The UK will inevitably follow, but as long as our inflation remains lower and other pressures are quite different, including our greater exposure to the problems in the rest of Europe, then I think the Bank of England can afford to wait.
Since Lehman Brothers collapsed, the Fed's policy of making money cheap or free helped keep the world afloat. And now it's over.
Well, Paul, there has been immediate reaction on the markets, hasn't there? And tell us about that.
The stock market in America has jumped up. I mean, basically, but the big issue here is what happens in the world, because you've now got America saying, okay, we're going to slow our economy down a bit because it's rising fast enough to not need this life support. Everywhere else is doing a version of life support. The Eurozone, which we are sitting on the edge of, is doing quite reluctant life support as well. We ourselves, there's no sign yet of an interest rate rise here. Japan, China, all quite worried about their own economies. Now, the issue is, we, the Brits, are sitting right in the middle of that world, as money will now flow to America because interest rates create a kind of floor for how much your money earns. Money will flow back to America, the money that flowed out of it 5-10 years ago, and it will create turbulence. So economists watching this are not all like the stock markets leaping up and down with glee. They're saying, let's see what the economic and even the geopolitical impact of all this is, because the crisis caused a big geopolitical impact. The unwinding of the anti-crisis measures could also do so.
Paul, thank you very much.
I've been getting away with it all